Hello everyone, welcome to the Ichimoku charts.com daily analysis for the S&P 500 for Monday, February 4th, 2013. Well, the change of trend today, a candle that's made a lower high and a lower low, and a very large black body candle, a very bearish candle. If we look back at the recent past, it's been quite some time since we've seen as bearish a candle as we've seen for today's trading. The previous time was here just after Christmas, and this period where we had a decent sell-off that found support within the cloud. That was the last time that we had some solid bearish candles. This could be significant for this market, and the important thing here too is that the close is below the 1500 level of support, and we've also taken out the area of support at the Tenkan Sen, which coincided with the 1500 round number level of support. This does suggest that there is a very strong possibility of this market retracing well back into this substantial first time frame uptrend that we saw in the recent past. Now, we do have solid support down below here at 1474, but no major support except for the area just around this 1490, which is really on a minor level here for just these two candles where we saw the buying coming in. There aren't any major levels until we trade down to that 1474 level. Now, this large black body candle has seen the sellers take control of this market for the trading day, very strong control, and they've been committed for almost all of the trading day and taken out quite a few of the previous candles when the market was attempting to rally above the 1500 level. Now, just looking at the Fibonacci extension, and here we're examining the relationship of this first time frame downtrend to the previous time the market was trending down, and today, all in one solid bearish movement, we've taken out the 100% level, and the market is testing towards the 161.8% level. So that 161.8% level at 1493 will be important for this market, but we haven't seen the market showing any signs of weakness for today's trading. A very strongly bearish candle. Some of the other levels that we should be looking at are the 261.8% down here around the 1479 level. So two important levels. I suggest that there is a good possibility that this market will trade through the 161.8% tomorrow, and then perhaps over the next day or two test to the 261.8%. And but what we should be doing is watching how the market reacts to these levels, and also remember that minor level that I said around the 1490 level. And now looking at the Fibonacci retracement, and here we've seen the market trade through the 100% level, so we're in an expansion mode of that through the 1496 area. Our target here is the 1485 level, which is the 161.8%, and then down below there at the 261.8%, and that coincides with this area around 1470 where we saw very solid buying coming in over the previous few weeks. So some important Fibonacci levels that we should be watching. Now, in terms of Ichimoku, obviously still a bullish market in the long-term time frame by trading above the cloud, bullish in the medium-term time frame by trading above the Kijun-sen, but now bearish in the fast-term time frame by trading below the Tenkan Sen, and it's been quite some time since we saw the market trading below the Tenkan Sen. So this also suggests that there is a possibility of the market testing down to lower levels. Now, as I've mentioned quite often, the Tenkan Sen seems to be the first place that a market that's in a very strong uptrend, the first area that we find solid support. Not in this case now, and this does suggest that the sentiment has turned strongly negative, whereas we would normally have seen the market bounce off there to some degree, but certainly no sign of weakness in the market. The buyers have lost all the control, they've lost the commitment that they had, and the sellers are really attempting to take control of this market. And it's little wonder to see that happen when we look at the strength that we've had in this market over the previous almost month or so, that we have been due for some sort of a decent correction. Now, we do have the Kijun-sen turning flat, and that once that turns flat, there is a strong possibility of price action retracing back towards there. So that does support the argument also that we could see the market trading to lower levels. So those Fibonacci areas are the ones that we really should be watching, as well as this minor level around 1490. And then we do have very solid support down around this 1470 area if the market does trade down through there over the next week or so.